and welcome to India Market Open. It's bright and early on Monday morning, guys. No big events except earnings. I guess this is the last leg of the earnings season, so there'll be lots of reactions and lots of managements we'll be talking to.
Yeah, I think the global cues, though, are one to watch out for, and that's reflecting perhaps in the implied open.
Yeah, but frankly, we can do with a bit of a quiet, right? Earnings season, budget, policy. I think we need a break. So I'm happy that this earnings season is coming to an end this week.
Elections are coming.
Yeah, but that's some time away, Tamanna. Give us a chance to breathe. Give us a chance to breathe.
Then the full budget in July.
Give us a chance to breathe.
We have 2 months at least. Yeah. At least 2 months. let's enjoy the moment.
All right. So, well, we may have, the wish of a quiet day today, but it's unlikely to happen because if you look at your implied open, you're looking like you're off to a positive start today, and where that's perhaps coming from. One of the factors is a very positive outlook as far as the US is concerned in terms of the economy, blockbuster results. Pretty much 80% of your S&P 500 listed companies have beaten estimates. It's a tech rally also which has boosted Wall Street. Pull up the NASDAQ as well, was up 1.5% on Friday. The S&P 500 closed above the 5,000 mark for the first time. And one of the things that has really, lent itself to those positive cues is the downward revision of the December CPI data, which was 0.3%, then the government comes and says, no, it's actually 0.2%. So you're seeing inflation in that sense trend downwards, and that's what boosted tech stocks as well. The 10-year was flat as a result. Crude is one to watch out for. Crude has slid back after rising over the weekend, but the tensions, the underlying tensions which are hitting crude prices definitely continue. The latest peace proposal by Hamas has been rejected. Israel is on with its entire operation in Gaza, so that's concerning. Asia is quiet for sure. China is going to be shut the whole week. A lot of Asian markets are closed, but we can pull up the Nikkei. Japan is open, and perhaps some trends from there. Japan and Australia, pretty much all that's showing some action in Asia. I'll quickly take you through the fund flows on Friday before I hand back to Niraj and what we saw over there. Remember, it was not too much in terms of volumes on Friday, and FPIs were buyers there. 142 crores is what they bought, and DIs sold 422 crores. The big volumes, though, have not come out yet. Markets are looking for the next cue, Niraj.
Yes, just before we get to trade setup, I think the big thing that also came out, and everybody's talking about the India valuation, the Morgan Stanley note on India is very strong, right? I mean, Jonathan Garner going out there and saying that India is the top EM pick, and within Asia as well, India, Japan kind of stay the top ideas. And amongst all the things that he says, I mean, something that a few other people have warranted, but when Jonathan Garner says you stand up and take notice, is that premium valuations are warranted by the superior fundamentals that India has. So I thought that
the Patek Philippe analogy continues.
In some sense, right? Yeah. and this is like Jonathan Garner sending out that Asia note to all their clients and saying that India is very likely to remain expensive, structural outperformance, so on and so forth. I thought that note is very interesting, independent of the Sensex or the Nifty targets that they may put out, but just the fact that there are people saying that India will remain expensive.
While Jonathan Garner says that, Mark Mobius as well, that I spoke to on Friday, was of this very same opinion. He said, we hold 25% India exposure, which is the single largest exposure to a country in his emerging market fund. He said, while we are valuing companies and looking at India as an expensive market, a lot of it is not very forward-looking. So the growth is so strong that those valuations are justified. But just a quick one on, while those are the two guys who are very bullish, CLSA.
No, sorry, just a word on Mobius, nothing else, but people tend to forget, people who are newbies tend to forget that the original EM expert is Mark Mobius.
Is Mobius.
And he did say, he said, I was in the country a few months ago, and we were talking about real economy, and it's funny, it keeps coming back to me in various forms, and he said, historically, while I've always made a trip to India, I can significantly see a difference. You can see things changing, the vibe, the whole conversations have actually changed. But talking about expensive and not expensive, I think CLSA put this article out, their report last month, where they say that India stands now to be the most expensive market in the world. They also said it's the only market that's trading in the top decile of its historical trading range. CLSA Morgan Stanley, well, the market's clearly weighing both and consolidating as expected.
So you can argue that. Actually, the trade setup, I mean, on the trade setup, that's what I'm saying, because main indices last week had a very quiet week. It was only PSUs which kind of were to the fore. And I dare say, just looking at the numbers, ONGC, SJVN, Midhani, SCI, etc.
Not great.
Let's see if there's a bit of a breather there on the PSU pack today and maybe for the rest of the week. The other aspect is that a lot of people have been talking about is, can there be a V-shaped recovery in private banks? The weightage of private banks, guys, by virtue of the selling that has happened, has come off by nearly 500 basis points on the Nifty. So that's the extent of damage that has happened. Can there be a V-shaped bounce back? Now, surely the argument around valuations is fact, but if you look at the delivery-based selling that happened last week as well in almost all the private sector banks, and not just HDFC Bank, I think there is an issue there. The delivery-based selling leads one to believe that a V-shaped recovery is not necessarily very, very likely. Sure, you could buy them right now. They are great valuations. 1 year down the line, you'll be laughing your way to the bank, hopefully. We all hope so because we want banks to perform. But the V-shaped recovery from a trading perspective may not necessarily be the case, even though the whole of last week I've been saying that these are levels from where the quant indicators indicate the market is ripe for a bounce back. May not be banks though. Lastly, just from a sectoral perspective, newsflow results, Milake, Pharma, probably the sector of the day today for right and the wrong reasons, and cement for the kind of results that have come out, guys. I mean, the stocks have moved up a little bit, but not surprising as we reach the busy end of the construction season, that you see cement dispatches month on month go up, and therefore the stocks continue to see more activity.
A lot of stocks really in focus today, but let's start with the big ones
to watch. So you've had, I'm just going to add auto to that list, right? Again, fantastic number. So auto sector along with pharma could be one you want to closely watch out. We'll quickly take you through the big earnings. Two big ones, one from the pharma, one from the auto pack, but I'll start with Hero MotoCorp. Fantastic numbers to say the least. We generally seem quite impressed with what we've seen on Hero MotoCorp. Their revenues were up substantially, up 21% to come in 9,724 crores. EBITDA was up nearly 48%. Margins have expanded substantially, and I think that is what the street is going to be very excited about. It's up at 14% versus 11.5% that was seen in the same quarter last year. Well, what stood out for us on Hero MotoCorp was the fact that most brokerages are optimistic. They've all upped their target price on Hero MotoCorp. We've seen Jefferies and Nuvama for now. Both those target prices now stand at 5,650 and 5,600 respectively. Well, they're poised. What brokerages believe is that Hero MotoCorp is poised for a strong growth going ahead on back of two-wheeler demand. Premiumization and EV are the two verticals or segmentization that is going to work out for Hero MotoCorp going ahead. Free cash flow as well is expected to remain strong. So that is the Hero MotoCorp story. No upgrades as such, but increase in target price is what's going to drive the counter going ahead. And the fact that the free cash flow and earnings have been strong, margins are good, the counter will see some buying in early hours of trade today. Well, let's move on from Hero MotoCorp to the other one that looked pretty fantastic was Honasa. Their revenues were up 27% to come at 488 crores versus 382. EBITDA was also up very sharply at 34 crores versus 11.8 crores. Margins here to have expanded sharply by 395 basis points to 7%, so versus 3.08 that we saw in the same quarter last year. A couple of things that stood out for Honasa is their same-store sales have actually grown quite substantially, up 31%. Stronger volumes have led to higher growth. Better festive demand is what pushed this quarter for Honasa. Industry growth in line with industry. What you also want to see here is that, and this we've seen quarter on quarter for Honasa, capital efficiency. The fact that they're sitting on a huge pile of cash helps them with their working capital cycle, which continues to stay at -6 days. So capital efficiency is what has been a pretty impressive factor for Honasa, and that continues to play ball for them. The stock went home with gains of 4% on Friday. Won't surprise me if we get a good gap up on this one too. The other one that's definitely on our radar, and I'm excited about this, is Aurobindo Pharma. Very, very strong earnings for Aurobindo. Revenues were up 14.7% at 7,351 crores. EBITDA was up 68% to come in at 1,600 crores. Margins also expanded substantially from 14.8 that we saw in the same quarter last year. You've seen an expansion of 22%. Net profits also were quite high, at about 92% higher for the quarter. Remember, Aurobindo since December 21 hasn't done margins such as these, so that is what we're excited about. Over 20%, they've not managed to beat that since December 21, so the markets will be excited about that with Aurobindo on the margin front, and profit as well has been the highest ever posted by Aurobindo Pharma. So the stock in early trade, like Niraj and Tamna said, Pharma is going to be a space to watch, and Aurobindo could be the leader of the pack this morning, guys.
Yeah, and Aurobindo Pharma has gone through a lot of ups and downs as well. There was some negative news flow in terms of observations, etc. So all said and done, the numbers may give it that boost, but not everything is hale and hearty. And ONGC definitely may see some negativity. Now, one thing to keep in mind is that, remember, crude prices have been softening, and that's generally not very positive for ONGC. So you did see, and we're taking standalone numbers here. I want to make a point of that. Revenue is down 1%, EBITDA down 13%. Margins have shrunk fair bit, about 600 bips, and net profit is also down about 6.7%. A couple of reasons. Remember, the gas policy has capped prices. On the other hand, there were some weather-related disruptions to their work. And having said that, though, Citi has retained a buy on ONGC with a 285 rupee target. They say that the results are weaker than expected, like we've been mentioning. The EBITDA is below estimates, and oil and gas production trends have been slow. Having said that, their KG production ramp up, which has started pretty much last month, will start showing benefits on Q4. So that's one to remember. There could be an upside going forward. So positive view on high earnings visibility and attractive dividend yield is some of the points that Citi sees on the plus side. SJVN is another one, I would say, and Niraj was talking about how for a lot of companies which have run up on the back of promises, the numbers sort of give a clearer picture. So revenue is down about 1.5%, EBITDA down 3%. The margins have narrowed to about 67.81 versus 68.91, so about 112 bips. And net profits, though, are down a fair bit, down 51% at 138.97 crores. So sharp cut over there. There's an interim dividend. Bloomberg put out a story about how JM Financial Institution has cut recommendations on SJVN to sell from a hold, and the target price has also been set down to 72 rupees. So I would watch out for SJVN as well. Of course, they've trailed all of the estimates. Divi's Lab is one, though, which looks, I would say, positive. Revenue is 8.6%, and pharma definitely is a larger trend that we've been seeing over here. Revenue is up 8.6%, EBITDA is up 19%, margins also looking healthy, net profits are up 17%. Nuvama says they have reduced their take on Divi's Lab, but they've increased the price target to 3,200 from a 3,070 earlier. Revenues have disappointed according to Nuvama. No meaningful margin recovery, and pressure in generics and higher OPEX operation expenses has led to EBITDA margin miss. So quite a few. I'll come back with more, Niraj, because so many stocks to discuss this morning. But what's your top 3 or top 4 on your list?
Yeah, but just a word on Divi's. Much like Loris and much like some of the others, the CDMO opportunities are taking time to fire. And while Nuvama have done what they've done, Elara, Systematics, and one more, all three are negative on Divi's because of this performance. And in fact, I think the if I'm not wrong, the systematics note by Vishal Manchanda speaks of a price target which is 30% lower than the current market price as well. So much like Laurus, but maybe as Harsh was pointing out, this is the first quarter of margin recovery for DVs, so could be interesting to see if the markets reward that or do the markets punish the no growth in sight problem for DVs. But Tamanna mentioned pharma and PSUs. I'm carrying forward that baton. A lot of weak numbers. So Midhani is the other one, much decorated, very strongly favored stock, but look at the margin contraction there. Revenues were up 8%, which is okay. I mean, single-digit growth, nothing to write home about, but okay. But EBITDA down 45% for Mishra Dhatu Nigam, as a result of which margins contracted 1,400 basis points from 28% to 14%. Now, you know, this is not a good print by any stretch of imagination, even if the valuations were good, which I mean, they're not necessarily cheap. And net profit down 67%. So very likely that Midhani will have a correction today, in addition to SJVN. SCI, you know, everything else was okay. Revenues were down 10%, which is not great, by the way. One would have hoped that in a quarter which has seen probably shipping rates move up because of all that's happening around Red Sea, but maybe there are disruptions, what have you. But SCI, revenues down 10%, EBITDA down 11%, margins flattish, net profit down 50%. And for a stock that really rallied from nearly 180 to 260, 270, and then has come back, this is not a good print. Very likely that might see a bit of a reaction as well. And last stock, and then I'll come back with others, but the last stock is on my radar is Campus Activewear. Now, we know what's happened to Bata, we know what's happened to Relaxo. Certainly, the footwear companies, which are not necessarily premium focused, are seeing an issue. Campus revenues were up 1.37, so very blah, if you will. But as a result of that, the margin narrowed to 781 basis points, by 781 basis points to 11.92 versus 19.74%. And by the way, the revenue numbers are kind of in line with, mota-moti in line with estimates. The margin expectation was 20.8 and they've come in at 11.92.
Okay.
PAT at 25, expectations of 57. So very bad performance, very likely Campus too. Like Relaxos and like the others Batas have done, might have a bit of a reaction.
I think one that may have a good reaction would be PI Industries.
Waiting for one.
Very,
good number.
very good number there. It's been a multi-bagger in the last couple of years. It's been a favorite for the street. Let me take you through what those earnings are. Revenues were up 17% to come in at 1,897 crores versus 1,600 crores. EBITDA was also up nearly 34% to come in at 553. Profits were up 28% at 448 crores versus 351. They've also approved an interim dividend of 6 rupees per share. Couple of things that stood out for PI Industries is their strong revenue growth is what has pushed them up for this quarter. Margins have also aided PAT. Very, very solid margins have come in at 27% versus 25% in the same quarter last year. CMS, remember, is the key driver for its earnings, and that's really what's played out for the company in this quarter. 13% growth was in the agrochemical exports, which was again led by a strong product mix and by volumes. What we did see on margins, which is worth a mention, is a one-time impact of a theft recovery. So that contributed about 300 basis points to the margin. So while the margins are very solid, a function of that is a one-off item for PI Industries. So the top line numbers are looking great. There is volume growth, there is revenue growth. They've also talked about aggressively expanding. They've spent 763 crores on acquisitions, pharma acquisition, the tune of 500 odd crores. And remember, the counter was under pressure because of Chinese players entering the pro-sulfane business, which is a key product for PI Industries. But the markets, of course, the management did indicate that this is not going to be a problem because they do hold the key licensing on this one till FY28. So good news and bad, but the good news is that good numbers, and while you'll have listed a few bad ones, this one hopefully should get a little bit of a pop-up this morning.
I wish I had another great one to talk about next, but
I do, but you can quickly finish yours. Yeah, no problem.
So you go good, bad, good.
Good, bad, good. Okay. So Tata Power. Tata Power is one I thought we should bring up, and another a bit of a blah quarter. I'm going to use Niraj's word of the day, blah. So a bit of a blah quarter. Revenues up though about 3.5%, nearly 4%. EBITDA's also doing okay, but just look at the CLSA note where they're talking about the stock being ahead of its fundamentals on a frenzy of power stocks, and that's really what will perhaps give it not too much excitement. Weak coal prices is a key risk to its EPS, though there is a positive in terms of Odisha discoms and pump storage. They have upped the target though to 249. So Tata Power is one that I would watch out for, and we're going to be speaking to them ahead on the show as well. Should we quickly talk about 197? Just because
Very quickly, but we are out of time completely.
Because there is no relenting to the news flow on it, and we've broken a story this morning about how that 29th Feb deadline may be extended. That could be looked as a bit of a positive.
For Paytm shareholders, cross fingers. Just very quickly, two stocks that might react positively, Inox Wind and DOMS. Very good numbers from both, margin expansion from both. So watch out for both Inox Wind as well as DOMS. Those are two names that might react.